You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 23rd day of August, 2024. Thanks so much for joining us. Wherever you are, wherever you are, we're just glad to have you right here, right now. This is our daily schedule, which we do our best to adhere to each and every broadcast. If you're tuning in via our YouTube channel, youtube.com/CFRN, there are currently over 2,600 daily episodes archived there for your educational and viewing pleasure. So if you're new to the world of CFRN, it's really a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. You get the idea. It's all out there. youtube.com/CFRN. And if you have not yet taken our free trial, go to mytradingiq.com. At the top of the page, it says 5-day free trial. No credit card required. Just click the purple button, fill out the registration form, and we'll do our best to get your desktop set up today, get your indicators indicating today. The weekend won't count against your trial, but you will have access to the indicators, and there are markets that trade over the weekend. Your trial will officially start Monday and run all the way through next Friday. So if you show up each day, ask lots of questions, at the end of the 5 days, you'll be able to make a well-informed and intelligent decision as to whether or not trading is right for you. Our devotion this week is Faithful Man or Woman. Devotions for living in faithless times. And you don't have to look too far to see what faithless times we are living in. Our scripture today is 1 Thessalonians 5, verses 16 through 18. And I'm going to share it with you from the Message translation. Be cheerful no matter what. Pray all the time. Thank God no matter what happens. This is the way God wants you who belong to Christ Jesus to live. Again, 1 Thessalonians 5, verses 16 through 18. So, as believers, we should be a people who really want to do God's will. Unfortunately, sometimes our own will gets in the way, or the will of other people, or the will of the world, the will of the media. The list goes on. But the will of God is perfect. His plans cannot be thwarted. Nothing can happen without His approval. If only we could be that certain about our own desires and plans, or if only we knew for sure what He wants for us. Should we find a new job or stick with the one we have? Do we take our relationship to the next level or cool things off for a bit? What should we make for dinner? Do we invest in the market or pay down our mortgage? When faced with too many options, we quickly fall victim to decision fatigue. Scientists have discovered a correlation between the number of decisions a person makes and that person's likelihood of making poor or uninformed decisions. After a certain number of choices, we become incapable of wise decisions. While we might ponder what to make for dinner, we don't need to waste any mental energy figuring out God's will for our lives. He tells us exactly what to do in 1 Thessalonians. Rejoice always, pray continually, give thanks in all circumstances, for this is God's will for you in Christ Jesus. Joy, prayer, and thanksgiving are to be the hallmarks of our lives. Being a faithful man or woman means actively choosing to rejoice in God's goodness, praying for God's wisdom, and giving thanks regardless of the circumstances. When we trust God, joyfully putting our lives in His hands and thanking Him for whatever happens, He is free to perform His will through us. No decision fatigue required. So ask yourself these questions. How can you rearrange your schedule so that your biggest decisions are made early in the day? And question number 2, do you tend to make bad choices late at night when your willpower is low? Join me in a word of prayer. Heavenly Father, we come before you today with hearts filled with gratitude. Help us to rejoice always, to pray without ceasing, and to give thanks in all circumstances, just as your word teaches us. Remind us, Lord, that this is your will for us in Christ Jesus. And Lord, today we lift up America to you. We are in especially fragile times. Lord, our nation is in desperate need of strong and sound leadership that prioritizes integrity, wise economic policies, secure borders, and safety in our streets. Help us as a country to reject the path that leads towards socialism and communism, and instead choose leaders who will uphold freedom, protect our values, and restore stability. We place these upcoming elections in November in your hands, and we trust in your plan for our nation. May we carry an attitude of joy and thankfulness in everything we do today and every day, trusting that you are working all things together for our good. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Everybody's been working for the weekend, and here it is. Let me give you the numbers from around the world. Had some excitement this morning with Jerome Powell making his long-awaited speech from Jackson Hole. And the markets are reflecting things he had to say. Currently, the Dow is up 252 points. You'd think it might be up a little more, but it's up. The Nasdaq is up 151 points, almost 1%. The S&P 500 is up 33 points. And this one will blow your socks off. The Russell 2000, our man in the street, is up 65 points. That's a little over 3%. Have we ever seen the Russell up 65 points in a day? Probably have, but it hasn't been very often. In the commodity basket, crude oil is up $1.79, trading $74.80 last. That's a gain of almost 2.5%. Gold is up $27.30, trading $25.44 last. That's a gain of a little over 1%. Silver up 64 cents, trading $29.69 last. That's a gain of 2.25%. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. So we're currently up 64 cents on the session. So that's a little better than $2,500 per contract traded. In the Asian markets at the close, the Nikkei gained 153 points. Shanghai rose 5. The Hang Seng dropped 28. And in the European markets at the close, FTSE up 39. The DAX up 142. The CAC up 52. So we had a mixed day in Asia due to the Hang Seng. In fact, that's the only red on the chart. It was a green day for the UK, and it's definitely a green Radio Friday here in the US of A. Let's take a look at a couple of headlines. Vice President Kamala Harris formally accepted the coronation last night for president. She thanked Joe Biden, who dropped out of the race last month, endorsing Harris as his successor. She discussed her upbringing and history as a prosecutor and evoked the events of January 6th, abortion access, and a failed border security bill. Of course, criticizing former President Donald Trump for all of it. Even though she's been in office now for almost 4 years, you would think maybe she could have fixed some of that, but there wasn't really any talk about how these problems are going to be fixed. Just that big Barbie smile that says, don't worry, it's all going to be okay. You can trust me. If you watched it, good for you. I did not have the intestinal fortitude to actually watch it myself. Along with criticizing former President Donald Trump, she also pitched herself as an advocate of working families, promising a middle-class tax cut, and reiterated her calls for an Israel-Hamas ceasefire deal and hostage release. Is there anybody on planet Earth, except Hamas or Hezbollah, that doesn't want a ceasefire and a hostage release? But I digress. Recent polls suggest she has a 2 to 3 point lead over Trump nationally, with tight margins between the two in key swing states. Independent candidate Robert F. Kennedy Jr. handed in his papers this morning. He has officially exited the race, and today he may possibly endorse Trump in a speech right here in Phoenix, Arizona. Actually, it's in Glendale, but that's just a part of the major Phoenix metropolitan area. You could get tickets to go, and my wife and I thought about going. The tickets are free, but you got to park. And man, talk about scalpers. Even to go downtown Phoenix on the first Friday night of each month, $50 to park your car. That's just insanity. But these are the times in which we find ourselves. Up Canada Way, over 9,000 rail workers were locked out of Canada's two major railroads yesterday amid failed contract negotiations with the Teamsters Union. Stoppage is expected to cost roughly $750 million per day and potentially disrupt U.S.-Canada trade, 14% of which stems from Canada's rail network. Canada's government announced it would force the parties into arbitration. And I posted a video, which is a little mind-boggling, in our Breeze channel today. That is our own personal social media channel. British researchers have trained a hydrogel. We've all had a peanut butter and jelly sandwich. Just think of us dipping your spoon into the grape jelly there and just looking at that little blob. This is kind of what we're talking about. British researchers have trained a hydrogel to play the 1970s computer game Pong. You remember Pong. What's interesting is not only did they train it to play Pong, but it got better over time. The study builds upon earlier research showcasing the ability to conduct a similar experiment using brain matter. Researchers at the University of Reading placed a piece of water-based gel between two plates of electrodes. They administered electric currents representing the paddle and ball through the gel, training it to extend the length of time the ball was actually in play. The gel reached its peak skill level after just 20 minutes. And again, you can watch a video of this in our Breeze channel. The study's authors say their findings do not suggest the material is alive, but rather that it can exhibit something akin to memory, not unlike the impression a pillow makes on skin. Their findings may also be useful for the development of AI. Machine learning systems are currently modeled after biological processes. This experiment could provide an alternative example after which to model systems like ChatGPT. Well, everybody knows the Fed has said it's time to cut the rates. And again, I'm surprised that didn't get more excitement. I mean, we got an initial shot in the arm, and the last I looked, the markets were trying to climb back. We'll take a look here in a minute. Obviously, the Russell just went through the roof, up over 3%. Jerome Powell sent a straightforward message to the markets in his speech this morning, saying the time has come for the central bank to begin lowering interest rates. Speaking from the annual economic symposium in Jackson Hole, Wyoming, Powell said the time has come for policy to adjust. The direction of travel is clear, Powell added, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Powell's speech comes just over 3 weeks out from the Fed's September meeting, September 17th and 18th. On the 18th, which is a Wednesday, of course, that's when we'll get the announcement. Now, this should see the central bank announce its first interest rate cut since 2020. 4 years. Powell acknowledged recent softness in the labor market in his speech and said the Fed does not seek or welcome further cooling in labor market conditions. But as always, the Fed is behind the curve. And I'm speaking directly to those million jobs, well, almost a million, 818,000 this week that just went poof, as if they never existed. The July jobs report rattled markets earlier this month, revealing that there were just 114,000 jobs added to the economy last month, while the unemployment rate rose to 4.3%. That's the highest since October of 2021. Data earlier this week also showed that 818,000 fewer people were employed in the U.S. economy as of March, suggesting reports have been overstating the strength of the job market over the last year. Well, if you know anybody that's looking for a job, they could have told you that without all the fancy calculations. As inflation fell fast in 2023 and continues to slow this year, Fed officials were cheered that the steam seemed to come out of the U.S. economy, not through rising unemployment, but rather a decline in the large number of job openings. Businesses posted during the peak of the pandemic era labor shortage. But the economy may now be near a tipping point where a continued drop in job openings will translate into faster increases in unemployment. An argument in favor of the Fed beginning to cut interest rates to guard the labor market, according to new research presented on Friday at the Jackson Hole conference. You know, they go to an awful lot of work and spend an awful lot of tax dollars to arrive at conclusions that are just kind of evident to real people. So what's all this going to do to real estate? The U.S. Department of Justice and 8 states have sued a company called RealPage, accusing the property management software company of using algorithms to help landlords illegally collude and drive up rents for apartments. The lawsuit filed in North Carolina accuses Dallas, Texas headquartered RealPage of letting landlords collude by sharing their pricing information with the company's software, which then recommends rent prices. The software keeps landlords from lowering rent and offering deals to attract renters, according to the Justice Department. Right now in Phoenix, a one-bedroom in a decent neighborhood, it's going to run you about $1,600. Now, I realize in New York City, you can't rent a broom closet for $1,600 a month. But for Phoenix, this is very, very out of the park. High housing costs are a key concern for U.S. consumers ahead of the November presidential election, with home prices rising nationally by about 50% and rent going up around 35% in the last 5 years. Now that's from Zillow. The case is the first time the Justice Department has gone after algorithmic collusion, a growing concern for antitrust enforcers as technology companies offer pricing services based on big data. Attorney General Merrick Garland said this in his statement: Americans should not have to pay more in rent because a company has found a new way to scheme with landlords to break the law. The Justice Department points to statements by RealPage executives that it says show they realized they were helping to dampen competition in the rental housing market. There is greater good in everybody succeeding versus essentially trying to compete against one another in a way that actually keeps the entire industry down. The Justice Department also accuses RealPage of illegally monopolizing the market for property management software for multifamily dwellings in the U.S. Joining the Justice Department in this lawsuit are the Attorney Generals of North Carolina, California, Colorado, Connecticut, Minnesota, Oregon, Tennessee, and Washington. And I bet you didn't even know there was a company called RealPage before I shared that with you. I didn't. A flurry of tech bundles has returned consumers to a fundamental American question. Would you like fries with that? As Walmart chases the industry-defining success of rival Amazon Prime, it's now offering members of its paid loyalty program discounted meals at Burger King. In Walmart's case, the retail giant is literally prodding its customers with more savory calories. Verizon, in a bid to bolster its own subscription revenue, will now offer 12 months of Netflix premium plan for free to customers who purchase a year of the National Football League's streaming service. Bundling in the app era is an evolved form of upselling that cloaks itself in value. We unbundled cable television only to reconstitute it. Now we're subscribing to cheeseburgers. But what at first looks like a soft-pedaled sales pitch from companies and their executives that simply want new offers to tout starts to build real animosity when it's price hikes by another name. A recent example here would be the $1,700 Snoo Smart Sleeper, whose maker recently introduced a premium subscription model to ply newly sleep-challenged parents with an extra smart bassinet feature. In recent years, luxury car makers have sought to charge a fee for features like heated seats, only to backtrack on those plans. Ultimately, the companies are looking for their own version of a real bundle, with an offer as good as free shipping on almost anything or unlimited access to almost every song ever recorded. And are the improbable logistics behind realizing you need paper towels and then having someone place them at your front door in the middle of the night even replicable? Probably not. But consolidation can be an efficient way to give customers value and make a ton of money. Just ask the cable bundle. It's gotten to the point where consumers are really kind of confused. Maybe you break down on the side of the road and you realize you don't have AAA. And that last credit card that you got, you may not have noticed in that booklet they send along with it, that because you are a holder of this particular card now, that you also have free roadside assistance. There's all this added value, in fact, so much of it that people forget they even have it. It's confusing. And I got to warn you to stay away from these television advertisements that seem too good to be true for all of these products that you so desperately need. And even when you check out and they ask you, you want to be on the auto ship program? We know you're just trying this product out, but we'll be happy to send it to you every month. I don't care how many times you say no, you're going on the auto ship program. And the packages just pile up by the front door. Sales of new U.S. single-family homes rose to their highest level in more than a year in July as a drop in mortgage rates boosted demand, offering more evidence that the housing market is recovering. New home sales jumped 10.6% to a seasonally adjusted annual rate of 739,000 units last month, the highest level since May of 2023. Now, a lot of these new home sales, they don't tell you, are being bought so they can be turned into rental properties. The sales pace for June was revised higher to 668,000 units from the previously reported 617,000 units. New home sales are counted at the signing of a contract. They, however, can be very volatile on a month-to-month basis. Sales increased 5.6% on a year-on-year basis in July. The average rate on a 30-year fixed mortgage was 6.46% this week, the lowest since May of 2023, and more than half a percentage point lower than the same time last year. That info from Freddie Mac. Now, you know, I always talk about how the indices will always go higher over time because that's how they're created. The S&P 500 has 500 large cap companies. Russell 2000 has 2,000 small cap companies. The Dow has 30 blue chip companies. But when one of these companies gets weak, gets sick, misses their numbers, they get the boot and they're replaced with a stronger company. Well, you may have heard of Burberry. Burberry Group is on the verge of exiting the FTSE 100 index, ending the luxury goods maker 15-year stay in the UK blue chip gauge. Hampered by an industry-wide slowdown in demand and a faltering brand revamp, the firm's shares have slumped by a third over the past 3 months, sending Burberry tumbling down the market value rankings that index compiler FTSE Russell uses to determine changes to the benchmark. So the question is who will they replace Burberry with? I don't know. All right, let's jump over to Logic 247. It's our 24/7 around-the-clock E-mini alert service. Currently in week 316 of Logic 247. Over 316 weeks, we have issued a total, or well over 17,600 individual handcrafted alerts. I think we're approaching 17,700. And what we've averaged with those 17,600 plus alerts, we've averaged 20% or less being stopped out on a weekly basis based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night, we issued a total of 57 alerts. One never triggered. Still waiting on the outcome of 12. Now, this recap was done at 6:30 a.m. Eastern this morning. So this afternoon, Valerie will finalize the recap for the week. 57 alerts issued, 12 still waiting an outcome. That's 44 actionable alerts, of which 10 were stopped out. That puts us at 23% on the week, slightly above the week-to-week average, but considering we had 0% a couple weeks ago, we'll still, if we end up at 23%, we'll still on a weekly average be well below the 20% that we've enjoyed, 20% or less for the last 316 weeks. Now the logic alerts have an entry price, an initial target, additional targets, and a final trade to target. The purpose of the alerts is not just so that you can trade them and not have to learn how to trade. They're designed to help you learn how to read the chart, how to turn chaos into clarity, how to see with your own eyes where windows of opportunity in the marketplace exist, and how to deal with them. Now, along with the logic alerts, which can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe, our original alert service, the concierge trade alerts, it's a way of checking to see just how well you've learned to read the chart. Now, this report does not come out around the clock. This is published as a static report shortly after the Globex opened each evening. The Friday session that we're in today began last night at 6 p.m. Eastern. The Monday session will begin Sunday night at 6 p.m. Eastern. So 25 minutes after the open, all of our members had all of these targets for all of these markets. First thing you do when the report comes out is make a note of where price is at the time the report is published. It'll always be between these two numbers. Now, make that note on your 30-minute chart, because all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. If it's not broke, no need to fix it. Draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, this is where you get to look left yourself. Remember, with the logic alerts, I gave you the entry price, the initial target, the additional targets, Now we get to find out whether or not you've actually learned to read the chart. And by now, you should understand how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the weekly zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. Published the zone since December 14th of 2009. So this December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So again, all of our members and trial members had all of these targets last night, 25 minutes after the open. Now, let's look at the daily chart of the S&P. You should look at the daily chart of whatever it is you trade, whether it's futures, or stocks, crypto, Forex, ETFs, because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and the size the institutional traders trade in, because they're the ones who actually move price. So if you'll make it a part of your daily routine to just spend 2 minutes peering over the shoulder of the institutional traders who move price, you should see your results change for the good over time. Now the green line, that is the BBC. It stands for bull-bear cross. When price gets below it, we're bearish. When price gets above it, we're bullish. Below it, bearish. Above it, bullish. So we've spent the week talking about resistance overhead at the 50% fib extension. We spiked it yesterday. We spiked it again today. However, we failed to take out yesterday's high. That's a warning sign. Let's see if we can get a pop-up there. There it comes. 56.65 and a quarter. Today we only made it to 62 and a quarter. So 3-point difference. Price is now below support at the 38% fib extension. The step line is in the process of crossing blue and climbing. So what you're seeing here is the initial euphoria that came from Jerome saying, I think I really will lower rates in September. That exuberance faded pretty quick as cooler heads prevailed. So now the question is do we have a leg, a retracement, and a leg that will ultimately take out the all-time historic high? Or do we have a leg, a very deep retracement, and another down leg on the way? Well, right here, we've got the 24% fib extension. Right below it, we've got the 24% fib retracement. Both of those are potential support. Then we have the low put in on August 16th, and then the daily BBC. Now, as you can see, the pullback to the BBC holds more often than not, whether you're pulling from above, from below, or from above. The pullback holds more often than it doesn't. Once it trades through, then we pull up from below and the pullback holds. So we got a leg and a retracement, huge leg based on some econ reports. The market found equilibrium and support at the previous bullish cross. And this was a pretty historic rally. And now we've just been consolidating really for the last 1, 2, 3, 4 trading sessions. That 50% fib extension was very important. Resistance 1, 2, 3 days. Now we broke support at the 38% fib extension yesterday and found support at blue and climbing. But now we're in a different dynamic. Where price is right now puts blue and climbing and the step line above price, which means they are potential resistance. So right here you've got resistance times 3. You've got the 38% fib extension, blue and climbing, and the step line. And then of course there's potential support at yesterday's low before we get to the 24% fib extension and then the 24% fib retracement. Once we hit the BBC, now that should be good for a bounce because the pullback holds more often than not. But with all the things we have going on the world today, from Capitol Hill to this convention that just ended in Chicago, to the Middle East, it's a crapshoot. Okay, the vertical line right here on the 30-minute ES chart. Remember, all alerts are created on the 30-minute chart, both the logic and the concierge. So this was the open last night. We had blue and climbing below us, that's bullish. We had the BBC above us, that's bearish. And so price was crunched up right into this little apex here. And then we finally got above the BBC and we hit the weekly trading zone at 5614/15. Resistance will send the market looking for support, which it found at the BBC. That support lifted us above blue and climbing, and then it was a run all the way up to 9 o'clock. And then the 9:30 opening candle, we saw a retracement. We had a red candle all the way down to the BBC. Remember, the pullback holds more often than it doesn't. Pullback held. Jerome started speaking, and off we go. This is the news the market has waited for so long, but obviously it was, for the most part, already factored in because we failed to take out yesterday's high. That's a sign of weakness. What happened next was very interesting. Price came all the way back down. We had a massive red candle all the way to the weekly zone. Now remember, overnight it was resistance, and today, on that big pullback, this was a huge red candle all the way down to the zone. These are the zones that were published Monday morning at 6:15 a.m. Eastern. Again, once they're published, they're carved in stone for the entire week. So we hit the zone, and it gave us a bounce. We attempted to recapture the highs put in earlier, but we failed. 2 attempts. That put us back below the BBC. Blue and climbing has turned to red and falling. And now price is below the weekly zone. And we've traded through this bullish cross, which we would typically expect to be good support. You could argue the previous candle gave you the support you would expect from the previous bullish cross. And this bearish cross, because of the euphoria over the expected news, we blew right through that. Normally that would be a spot where we would find resistance, at least the first time up. So are these normal market conditions? No, kind of far from it. However, should price continue to drop, I don't really see too much I like. We got a zone at 55, 94, 95. Got potential support here. So, yeah, you could leave it alone. Let it get to the zone if that's where it's going to go. It's red and falling overhead. And if you look down here at the 30-minute slingshot, it's red and hooking down. So I suspect we could see this zone before or by close of business today. 55.94/95. The highest zone for the week was up at 56.96. On the Dow, this is where we opened last night. Fill that window on the way down. We filled it on the way back up. Right here we had a bullish cross. This was the opening candle. Ran up to the BBC, consolidated for quite a few hours. Then we hit resistance at the zone. Then we got a leg and a retracement. And then we made our run to the long target, which is based off this high yesterday. Then we put in this high, which is right at the bearish cross. And then came Jerome. And this is what happened. And just like on the ES, price came all the way back to the weekly zone. I showed it to you on the ES. This huge red candle found support right at the weekly zone. Where now, even though we've spiked it back above that zone, and the Dow, same thing. Price came right to the zone, caught a bounce, and now we're below the BBC, below the zone, but we've got these two wicks here to contend with. So I would let price get below this bullish cross, which will most likely be support if price makes it down there, and then find some windows of opportunity in this area. All right, so that's it for the ES and the YM. We'll pick up with the Russell when I come back. Right now, the Russell is consolidating at its highest weekly trading zone. Michael's going to give us a recap of what happened in the live training room. Then we'll do some live trading on TradingView for 30 minutes. Then I'll finish the recap of the alerts, and we'll wrap the week up with a good word for the day.
All right. Here we go.
Looks good.
Excellent. All right. Let me minimize that and minimize this and put this over here. Here we go. Good afternoon, everyone. Happy Friday. Today is the 23rd day of August, 2024. So if you have not taken a free trial with us and you want to, go get mytradingiq.com right here on this purple button. Click on that. There is no credit card required for your free trial. All right, when you click on that, it's going to bring you to this registration page, which has all of next week's information in it. All right. Down here, all we ask for is your first name, your last name, your email, and your phone number. 5 multiple choice questions. If you have an Trader, give us a machine ID. If you have TradingView, give us your login ID. Right, when you give us that information, we'll be able to set up your trial. Set up your indicators on your trial so your indicators can start indicating and doing everything that you would like them to do. Now, the results today. We had a pretty good day today. I think this is the one I'm working with. Yeah, close out. We had a pretty good day today. We got the goal for the day right away. And I was saying last night in the partners meeting, you know how I'm starting in the morning session. I have this thing that says audio being promptly at 9:27. Usually, when I start out at 9:27, if there is a trade that sets up at 9:27, 9:28, when the markets open up, it usually goes in the right direction. You see all these ones right here? We now have 11 out of 17 times this month that we've gotten the goal on the very first trade since I started doing that. And even last month, I did it last month too. And out of the 21 trading days last month, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of the 21 last month were the first trade. So if you want to get in there, make your money and be done for the day, I think I've got a formula that seems to be working pretty well. All right, well, the spreadsheet. So we went through what we did today, right? We're up 126 on the NQ, minus 43 on the Russell, minus 50 on the YM, plus 14 on the S. 340 this morning. Took 2 minutes in one trade, $4,800 this morning. That's with 20 contracts on. We had a 48 tick win with on the NQ. I believe it was. Just make sure. Yes, it was on the NQ. Now I kind of messed that trade up because I trailed my stop with a manual trail, and it flipped me around in the market, and I ended up stopping out. I had a 2.5 point stop out that triggered right after I got the 48 tick win, so it only ended up being 38 ticks between the two trades. But either way, I got the goal for the day. And we took a total of 24 trades today. So if I would have stopped in, 23 trades more, I did make some more money, but it's still, it wasn't that much more money for 23 trades. Anyway, on the month now, we're at $8,967 over 17 trading days, averaging $527 per contract per 2-hour trading day. So we are still on track to have our best month of the year, I think. We've got to exceed 10,867. So next week we would have to gain $2,000. It could happen. It could happen. Just one good day could do it. One really good day. We'll see how it goes. I mean, there's a lot of volatility in the markets, and I expect there will be next week too. We have some high impact news coming out all the way at the end of the week next week. The last day of the year, of the month. I believe that is the last day, right? Next Friday? Yeah, the 30th. It's the last business day of the month, next Friday. And it'll be the last day of the 24/20 blueprint as well. Okay, so obviously in the 24/20 blueprint stuff, we've accomplished all our goals that we wanted to do. And we'll see, in 5 more business days, 1, 2, 3, 4, 5 more business days will be right here. Now, starting next month, I'm not going to go to another contract. All right, I've achieved the 20 contracts in the 24/20 blueprint. I'm not going to go to another contract next month. I'm probably going to drop down to 10 contracts because 10 contracts seem to be more efficient with the trading. I wasn't, of course, I'm not going to have as much money, but I'll get better fills, and I'll probably trade less, and the money should be pretty close to the same. With 10 contracts, well, it won't be. If we go back, let's just go back and look at the beginning of the year. So like right now, we're averaging $527 a day with 20 contracts, and we go back to the beginning of the year, right? 13 contracts. Oops, that was last year. 13 contracts at the beginning of the year. I was still having $456 a day with 7 less contracts, and that number should be a lot higher every month, but it's not necessarily a lot higher every month. It was 517 in July. I guess it should be higher as we keep going, but there's a lot of slippage and it's not very efficient. So anyway, that's the plan. If you were doing the 24/20 blueprint and you started this year with just 1 contract, right now you would be on 8 contracts. Maybe that's what I'll do. Maybe I'll just go down to 9 contracts and I'll follow this through for the rest of the year. 9, 10, 11, and 12. That's an idea. Either way, you would be 8 contracts right now and be averaging $1,910 per hour on the year right now. $1,910 per hour, right? And if you started with me at the beginning of last year, you'd be on 20 contracts right now, and you would be averaging $7,302 per hour. You would have only worked 49.85 hours. So you're still under 50 hours on the year so far. There was 1 year we averaged, I think we were almost under 50 hours for the whole year 1 year, wasn't it? I think it was 2022. I'm curious now. 2023, we worked 94.7 hours. I'm sorry, you can go through all this with me, but I really have to know. 44.33 hours in 2022. That's all we worked, getting the goal. 44.33 hours. Okay, and that year, we really traded just one contract the whole year in the room, right? So it was a lot more efficient, took a lot less time. And now you can see when you actually do trade more contracts, it takes a little longer. Last year, we started the whole process last year with one at the beginning, and it ended up taking us how many? 90 hours last year? 94.7 hours last year. So far this year, trading number of contracts we're trading now, we're at under 50, but we still have September, October, November, and December. Still have 4 months to go. I can't believe we only have 4 months left in this year. Wow. Anyway, back to this. That's the 24/20 blueprint. All right, let's get into the trades that we did take and didn't take and all that stuff. On the YM today, we had trades on every market today. So on the YM, we're actually minus 50 on the YM. We had a couple of stop outs. And let's just look at that. Let me bump this over. Okay, on the YM, we had a break even right there, and then we had a stop out there and a stop out there. Opposite directions, same market, opposite directions. It happens. And they were both complete stop outs. The signals were just not going in the direction. At that time, this one did end up going down. This one did not end up going up. We were minus 50 on the YM. There was a bunch of activity today, but not that many blue and green arrows in today. We weren't getting the pullbacks on the larger time frame. On a smaller time frame, but there was a ton of activity, probably too much to deal with. The Russell, we have a bunch of trades. We ended up with minus 43 on the Russell. So we started out on the Russell here. Yeah, we started out here with a stop out, minus 25. And then on this one here, this was a mistake. I shouldn't have taken this trade. And this was right when Powell started speaking. A minus 25 on that. Now, I shouldn't have taken that because we never came out of the overbought right there. So I stopped out on that. I was at minus 50 at that point. I got a break even there. Then a couple of small wins. I went from minus 50 to minus 45 and then to minus 43. So I had a plus 5 there and a plus 2. And one more break even over here. And that was it for the Russell. There was one more good blue arrow right here during the break, right before the break, but it was going right up into the zone. I probably would have skipped that. Not much else happened. Now, looking at it from here, since we entered the room, there wasn't a lot going on here on the Russell. I don't think it was on too many of the markets. Yeah, the NQ probably did have something, but even the ES, look at the ES right now. The last hour or so was kind of flat. Overall trending down, but kind of flat. Now, the ES had some good volatility today with all the scrolling, and I'm going to get back to the beginning of it. I didn't have that many trades on ES, I don't think. Actually, I did have quite a few trades. Let's get back to the beginning here. There's a nice blue arrow right there that I missed. A blue arrow here that I picked up 2 ticks on. Then a blue arrow there. I got 4 more ticks on. That'll put me at 6. Then a break even there. Then this one right here, I had a blue arrow, but that I only picked up 2 ticks. Got me to plus 8. But you see, it's kind of an odd colored blue. That's because it went into a no trade zone right there. If it weren't a no trade zone, it would have been a valid trade. But because it went into no trade zone, it wasn't the greatest trade. Then right here, we picked up 16 ticks on this one. I got me to plus 24, and I followed it up with a stop out right after, brought me back down to plus 14. That was it. I didn't trade this, and then we get into the break. During the break, there was a blue arrow here that would have stopped me out, and I wouldn't have done anything else to get a lower swing. So it would have been over here. Would have been the next thing that I would probably take in right there. Put a nice move down. Then another one right there. Put a nice move down. Then another one over here. Put a nice move up. And that was it for the ES. All right, we ended up with plus 14 on the ES. Now the NQ. We did trade the NQ today until it got really wild. Then I shut it off because it was driving me nuts. So let's just look at this. And we'll scroll back this way because there were a ton of bars on the NQ. We'll do that and scroll back this way to the beginning. Okay, back. Here we are. All right, so our first trade of the morning was right here on the NQ. We picked up 48 ticks on the very first trade, and then I told you I messed it up a little bit, and I lost 10 ticks on the one right after it. We had a break even here, and then we had a minus 36 on that one right there. So that goes down to +2 overall on the NQ. All right, then we didn't do anything for a little while. I think for a little while until all the way up here. We got another 48 ticks right there. That got us up to 50. Then we had a break even and another break even. And then right here we picked up 32 ticks. That got us to 82. And then right here we had another 48 ticks. That got us to 126. Is that right? No, it wasn't actually 48. It was 42. It looks like, yeah, 42 ticks. Something like that. Went from 82 to 126. So it was 44 ticks. 44 ticks is what it was. And that was it. That's where we ended it, I think. Well, we probably had some more trading, but I think that's where we ended it on the NQ. I think I shut the NQ off at that point. And I took a walk, and this happened where I took the walk. I was showing a head and shoulder pattern that had been developing on the ES, and it also developed here on the NQ. And this neckline break right here is what happened when I went away for a minute. There was a blue arrow there that would have stopped out. Purple arrow here and flat iron bands on both of those purple arrows. This one would have worked out. This one would have given you some kind of profit, enough to move the stop. Moving over to the next blue arrow. Here it is. There's a blue arrow there that would have stopped it out. Blue arrow here could have gotten it back. And that was it. That brings us current. Now, I did not go out and look at other things like Bitcoin since the big Powell revelation. It's actually, if I take off the paint bars, this is a big red bar right now. The way this is, I think, isn't it? I know it's actually starting to be a blue bar. It's starting to be a blue bar or a green bar. If I go in here and I shut off the paint bars, bar color, here it is. Okay, so it's a green bar now. I guess I have them green, but it was a big red bar at one point, and now it's a green bar. We'll see how it goes here. This is what I was pointing out earlier. The same thing was happening with the S and the NQ. We're in a big triangle right here. It's going to break onto this triangle area. And whatever side it breaks out on, this probably the side it's going to stay on for a little while. I am curious about the bonds, what the bonds did today. This was something that I've been watching a little bit too. Here are the bonds. Now this is a bond on a 3 range this morning. Okay, so when Powell started talking right here, the bond started going up. Now there is an auction today. There's some kind of an auction today, I think. Hang on. Nope, I guess it's not today. I thought there was one today. I guess not. Look at this. You believe that? Do you believe that? After getting, where is the correction? It's not even listed in here. After getting that huge correction of data that they've been leaning on all year. Look at that. I don't believe that for a second. They were expecting 1% and they got 10.6%. A little bit of a deviation. Last was minus 0.6. From minus 0.6 to 10.6. I don't believe that for a second. Anyway, on the bonds, you see we got some pretty good indications here using this tool. Not a lot of movement though. I thought there might be more movement given everything that he's been saying today. And so let's get back in here and trade. Now, for anybody that's watching in the live stream, in the YouTube live stream, if you haven't taken a free trial with us, go here to mytradingIQ.com, click on the purple button. If you take the trial today, there's no credit card required. If you take if you take the trial today, you'll have it all week next week. I was going to bring it to this registration page and have it all over the weekend and all week next week. Okay. All right. That is the deal. So we'll get in here and trade a little bit. Now I don't have my question box open. Let me bring the question box up. Let's see if but he is asking questions. I also don't have YouTube open, so I'm going to check that too. Right, there you go. Chris said, aren't bond auctions on Wednesday? I think they're not just on Wednesday, Chris. You can go and look. I think they're more than 1 day a week. Let's see, they were Saturday. They had, this is last week, yeah. Last Saturday, they had some auctions. Tuesday. They had some on Wednesday. And some on Thursday. Yeah, I think they have them, I guess whenever they think there's a reason for it. There's probably some sort of schedule somewhere that they follow. I don't know what it is, though. You are welcome. All right, so everything's going sideways here right now. We really don't have anything we can do right now on a smaller time, or on a bigger time frame. Let's jump down to a smaller time frame and see if we have something here that we can do. Now remember, on a smaller frame, I got to change the sensitivity because it is set to way too high for this. It should be 0.75. I mean, it's not giving us anything anyway, and this one should be set to 0.1. I drop this down to a 7 range. But neither one of them really giving us anything right now anyway. This would be 0.1 instead of 0.2. Here it is. All right. Oops, cancel on that. And here we have a purple arrow. Now the ribbon is not spread, so that is not the kind of purple arrow you want to take right there. Okay. Let me open up YouTube here and see if anybody's got any questions out there. I don't think anybody's going to, but I'll open it up anyway. Okay. So we have there. We have nothing right here. The closest thing we have is the Russell pulling back right here. And I don't have my DOM set up, my bracket set up for Russell right now, but I can put the strategy on, or a 7 range strategy, and that will set it up kind of. I just have to be really careful with the strategy because it didn't work right yesterday when I used it one time. But that will set up the DOM properly as far as risk and reward goes. All right. Anybody have any questions? It's 1:13. We have 17 minutes. 17 minutes of live trading if you have something that is moving enough to trade it. Does anybody have anything? Take the NQ off the 31 range, put it back on the 15 range. Let's see what that's doing. It's in a no trade zone. Okay, so everything that I've been saying to you guys about the upcoming things that we want to start looking at differently. You're on a 15 range. The ribbon's not spread anymore, so you're not going to do anything there. You want the ribbon to be spread. So like right here, the ribbon is spread. If we're coming onto the overbought, we'd consider a trade. It doesn't have to hit the BBC. It doesn't matter if it's hitting the BBC as long as the ribbon is spread. Over here on the Y end, the ribbon's not spread, so nothing there. Over here on the S, ribbon's not spread, so nothing there. Over here, it looks like it's going to spread the other way right now on the 15 range and Q. So if it did do that, and it came out of the oversold, then that would be a potential trade in there. Now, I did update this a little bit. David Z, are you in here right now? David Z, yeah, he's not in here. All right, those of you guys that did not get into the partners meeting last night, if you are Passport, you have access to this. You gotta let me know. Okay. Over here we have a green arrow short here on the Russell that just triggered. I did not do anything with it yet. It looks like it's kind of late to do it. The pullback looks like it's going to go up to 23.8, so I'm not going to do anything with it right now. Now, the 23.8 number was right here in the DOM a second ago. That's where I got that from. Now it looks like it's going to go down to 23.00. Again, from the DOM. That was in yesterday's lesson plan, reading the DOM. All right, so now the ribbon is all spread out nice. And if it pulls back, we'll take a shot at it over here on the NQ. Okay. So if you are not Passport, you'll get to watch this in this session, and you get to watch it in the morning session. Right? So you have access to the morning session, or obviously this session you have access to. This is pretty appropriate. So the ribbon is spread. We're pulling back. We're oversold. We just need the up close to pull us onto the oversold right here. 87.75 up to 21.75. 91.75. 91.75 is what I mean. There it is, 91.75, and it just slipped me some. Throw my stop at break even, and there it is. It just took off. All right, so we're locking in a whole bunch on this. Now, my target is all the way up at 48 ticks. So I don't even know what I got out of that, but it was a good chunk. And that, it turned out to be a black arrow here, but it didn't really matter. What I was looking at was the ribbon was spread, and we came out of the oversold. Right? It also turned out to be a black arrow, so that's good. But did you see how easy that was? That's how I want it to be in the future. The ribbon is spread, you get into the oversold and come out of the oversold. Pretty simple stuff, isn't it? This ribbon is spread, we need to get into the oversold and come out of the oversold. This ribbon is spread, we need to get into the oversold and come out of the oversold. So if you're not Passport and you want to have access to that, you need to upgrade to Passport. If you are in here and you're a mentoring partner and you're not an active member, meaning you don't have access to the room in the morning, just send us an email and get access to the room in the morning. There's another one on the AQ. Just send us an email and get access to the room in the morning. Okay. Stop calling break even on that one. And I'm going to lock in something on that. Right. It's the same thing again and again and again. There it is. I'm out with some more profit. And that was right here. The ribbon was spread. We came out and they were sold. Another black arrow too. I didn't even notice we had another black arrow there. And here it is again. And long again, this one is not looking so good right off the bat here, but my stop was a long way down on this. Right, and it just got me on that one. But again, remember, you're only trying to get the goal for the day, not trying to trade 100 times. And we'd easily gotten the goal for the day on both of those. All right, so the ribbon is not spread anymore. The ribbon over here is spread on the ES. The ES is actually suggesting a long trade on an up close here. So 24 up to 26 on that one. And now the ribbon is kind of crunched up in here, so it's not looking so good anymore. And it didn't come out of the oversold, so it didn't end up being a trade there. And we don't have anything there, anything there, anything there. This is starting to spread on the other side now, on the short side on the NQ. It doesn't have to actually touch the ribbon. The ribbon just has to be spread. All right, the ribbon just got crunched up a little bit. So we'll leave it alone. Okay. is now 120. So this right here is a valid trade on the green arrow trade right there. Here. Green arrow trade right there. And we're long on the green arrow trade. We want the stop to go to break even. We'll go to plus a tick right there. It should make it up to here right now. Okay. That's what it should do. Go to plus 4. 6. You go up even further. It should go up to right here at 30 and a quarter. I may cancel on this. But it should go up to 30 and a quarter right now. I'll put a mark there for you. There. That's where it should be going up to. All right. So we wait. You see how the ribbon is? If it even starts to go in the wrong direction, it changes color. I forgot that I had coded that into the ribbon. See how it changed from blue to red up there? To blow it up, you can see right there where it started to go the wrong direction. Who knew? 2 years ago, 3 years ago, when I actually created the ribbon, because I created that in DT Pro. And when I actually created that in DT Pro, that's 3 or 4 years ago now. I always say, the Lord's got his hands all over this. Everything that we do. He had a plan 3 or 4 years ago. So we're completely flat in here right now. Completely flat ribbon. So you don't want to trade anything in there. You know the outer band's going to be flat. If the ribbon's this flat, the outer band's going to be flat with it. So we just have to wait. So over here right now on the YM, we're in a no trade zone, I know that, but right here the ribbon was spreading out. You could have taken this right here. We came out of the oversold with the spread out ribbon right there. Okay, this was nice and spread. We're not oversold. Now we are oversold, so you can go long right in there on the oversold ribbon. I mean the ribbon coming out of the oversold with the spread out ribbon. I'm sorry, price coming out of the oversold with the spread out ribbon is what I'm trying to say. Price coming out of the oversold with the spread out ribbon. That's what I was trying to say. All right. And here it comes again right now. I'm still in it from the first one. I'm right over here. So we'll see how this plays out. Ribbon is still spread out. It should start moving up from right here. Okay. And for those of you guys who are wondering, my bracket on this is a 36 by 48. 36 by 48. And yes, I do get the 48 often enough. The YM is pulled back, it's oversold. The ribbon's not really spread out like it was. The ES ribbon is spread out, but it's not oversold. The Russell's got nothing. And we have a blue arrow to go with this now too. It should really make the whole thing right here. Go stop to break even. And the yellow's actually got going over there too. I'm not the yellow, but the yellow, the YM. Yellow. The Y. YM. Y is what makes it yellow. That's weird. Anyway, I'm locking a little bit of profit on this. Right, and get rid of my original stop. Way back here. I guess I'll leave it on. Because I will keep my target in place. And now I'll cancel.
On YouTube, Patient Trader said you're using a 36 by 48 on a 15 range.
Oops. Yeah, well, I was using, thank you, Patient Trader, for pointing that out. I was using the 36 by 48 on a 31 range, but I just kept the bracket the same in here for the 15 range. And you can see it's working out okay. Good point. Good for pointing that out, though. Thank you. I didn't realize I kept my bracket the same when I dropped down to the 15 range. I'm glad that you guys are paying attention. There was something I did on YouTube yesterday, a video that I created on YouTube yesterday, and Ken, one of our guys, actually made a comment on it about over here on the side, there were a bunch of alerts for different time frames that were not the one that I was making the video on. And his comment was, I am going to have to create some sort of a dashboard to help people understand all that, because I was creating a video on a 4 range chart. And I had all these alerts that were triggered from a 7 range chart over here on the side in the middle of the video. And the thing that I wanted to do when I created that video was I wanted to have the opportunity to actually take a chart from nothing on it at all, to put the actual tool on there to create the alert and have the alert trigger all in like 5 minutes. That's why I was doing it on the 4 range chart. And it all happened. It took 7 minutes, but it all happened. Ended up went from nothing at all on the chart to putting the tool on the chart, setting the alerts on the chart, to having the alerts trigger on the chart. All in 7 minutes. But it was another astute observation. All right, it is 1:26, but thanks for pointing that out. I mean, I should have that up here, right? So over here, I do have it up here. Patient trader. Yes. Thank you for that. This right here is a valid trade too. I looked at YouTube and I missed that. Sorry, everybody. Sorry, I missed that green arrow. We're in no trades. I'm over here on the YM, but this YM trade from way back here is still trying to work itself out. And on the YM, and this is something else you didn't point out, patient trader. I'm on the 7 range here, and I still have the same bracket on there. If I had done it on the Russell, remember I said I set the strategy up so I would have the right bracket on this. But I didn't set the strategy up on the YM. So I'm still long the YM from way back here. I guess it went enough right here probably to get the stop to break even, but my stop is set up for the 19 range. So here it is. I'm going to throw my stop at break even right now, I guess. I should have bumped it to break even a little while ago. I'm going to bump it right now. Because that was another mistake that I just realized. I'm just making a lot of mistakes today, it seems like. Some of them have cost me and some of them have not. I just got out of that at break even. Missed that one. Yes. Yes, observant and patient. Those are good qualities in a trader. I'm usually those things, except I'm not that observant today, it seems like. I'm just tired. It's been a long week. All right, so everything's moving up here. If I would have left that on, we would have a successful trade there. Right now, we had the pull out over here, but the ribbon wasn't spread. The ribbon is nice and spread right now, so if we get a pull back, we'll have another shot at it. Over here, the ribbon's nice and spread, so if we pull back, we'll get another shot at it. Now, you guys are seeing right now, I think for the first time, because this is the first time I've done this in front of you, but am I waiting for it to commodity oversold on the slingshot or the range trigger? On the slingshot. I'm not on the slingshot, I'm sorry, on the range trigger. On the range trigger. A lot of times they're going to happen at the same time, but there'll be times like this, the range trigger is actually, I don't know how to say it. It's different. Okay, that's how I'll say it. It's different. A lot of times they're going to be the same. They're going to be some of it being just about the same spots. but not always. Okay, so you want to have the ribbon be spread like this, right? You want to have the ribbon be spread like that, and you have it pop onto the oversold like that, just like that. That's all you're looking for. Okay, Caleb. And your passport, so you will have access to it. That's this one right here. Not yet. No. I did some things you can see right here. I have to refresh this. I did make some changes to it last night. Let me update to the latest version. And okay, let it do all that. And in here, I changed it just a little bit. I just took everything out of here, so you guys just plot that on your chart, and that's all you get. And you can move this around. You can move these around some, so you can have a different indication for yourself of when it comes out of the overbought and oversold if you want to change that. But I just limited it to just those little bits that you can mess around with, because you don't really need to mess around with it. It's kind of like the ultimate slingshot. There's not really a lot to mess around with in there. Okay, but no, you don't have it yet. If your passport, send me an email with your TradingView login ID, and I'll enable it for you. Okay, if you guys have passport, send me an email with your TradingView login ID. Again, I'll get that enabled for you this weekend. Okay. And if you're not passport and you're mentoring and you want to upgrade to passport, send me an email and we'll work out a deal. And if you're in mentoring and you're not active in mentoring and you want to be able to see it for the 2 hours in the morning, then send an email and we'll send you what you need to get activated to get in there in the morning to be able to watch in the morning session. Okay, it's a simple process. And everything's spread out right now. And up close, I just realized I just went over a little bit, but that's okay. And up close on this would be another indication right here on the NQ. So be ready for that. And pulls out of the oversold, ribbon is spread, you'd expect it to go up. Okay, all right. It didn't pull out of the oversold, the ribbon is still spread though, so you still have a chance. And up close right here, coming out of the oversold. Okay. And ribbon over here on the ES is spread, but you're not anywhere near oversold. Right, so this is starting to crunch up. The ribbon's starting to crunch up a little bit. So the trade is still potential. There it is. And it's a blue arrow on top of it. Now the ribbon got crunched up a little bit in there. It took a little longer than normal to get that trade triggered. So not the optimal trade. I like to do it. I like it when it does it on the first pullback. Where it doesn't wander around down here and you oversold too long. Comes down and hits it and it goes. But that's it, guys. With that, I'm gonna wrap it up the afternoon. Going into here, if you have not taken a free trial, let's go here to mytradingiq.com. Right here is where you sign up for the free trial. Now, any of you guys that are out there on YouTube that were watching this, the idea as we move forward, finishing up the 2420 blueprint. If you've been watching YouTube for a while, the 2420 blueprint is a concept, okay? It's moving from one contract to 20 contracts slowly. It's a slow road, all right? It's a concept. So it's not something we're going to stop doing. It's just something I'm not going to add another contract. I'm not going to go to 21 and then 22 and then 28 because it gets inefficient with the markets that we trade. After you get to a lot of contracts, the markets that we trade, it gets inefficient. So what I'm probably going to do after the 2420 blueprint is go down to a lower number of contracts. I might just continue it over here, go to 9 contracts and continue this the rest of the year out, 9, 10, 11, 12 contracts. That seems like a good idea. And then I just ride this all the way out so you can see what happens when you start with one contract and do it all the way through. But we'll have all the results of the 2420 blueprint and the 20 contracts. We'll have all that at the end of next week. And you're seeing in here now where we want this to go. Afterward, we're going to go to larger time frames. We're going to go to fewer, bigger trades, easier to get into, fewer indicators, less decisions to make overall. That's pretty much all it is. Less decisions to make for everyone, and stuff that you can apply to anything, easily apply to anything. You'll be able to see the ribbon on any market you look at. You'll be able to see the ribbon any time frame you look at. You'll be able to see the ribbon. You'll be able to see this going into and out of oversold. It's as simple as that. All right, that's it. If you have not taken a free trial, you really need to get into the free trial. Go here to mytradingIQ.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and it'll bring you to this registration page. Fill out this page. First name, last name, email, phone number. Right in here, give us your TradingView login ID if you have one, or give us your trading machine ID if you have one. And there are 5 multiple choice questions just to answer those honestly. All right, and that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking the South Mountain, America's largest city park. Wait, if you are ready. I read it over a little bit on you.
Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $4,800.
Good job.
Thank you.
All right, guys, you left off with the Russell, and the Russell is still doing what it was doing. We hit the highest weekly zone at 2229/30. We spiked it, then got right back below it. In the process, the step line has now crossed blue and climbing. And what that tells us is that there's a very high probability that price will now retrace back to the BBC. If we simply consolidate sideways, then the BBC will rise to meet price, which is a different dynamic than price dropping to the BBC. But here's where we opened last night. We consolidated at the zone. We had blue and climbing. That pushed us up above the BBC. So we got a leg and a retracement, a leg, a retracement, a leg, a retracement. And then we hit the long CTA target. We spiked the zone at 2178.79. And along came Powell and took us all the way to the highest zone. So now we're just waiting on a retracement back to the BBC. On the NQ, here's where we opened last night, 6 p.m. Eastern. We got support below us, resistance above us. Blue and climbing walked us above the BBC to the weekly trading zone where we consolidated for a few hours. We got a leg, a retracement, and there's the Powell bump. A lot less noticeable on the NQ than the other markets, which is kind of interesting. But you'll notice that the high of the day is at the previous bearish cross. You have a bearish cross that leads to an extended move. First time price revisits that area will almost always be good resistance. This is a picture perfect example of that happening. So that resistance sent the market looking for support, which it found at the BBC. We spiked the BBC. We even spiked the zone. But by the time the candle closed, we were back above the zone and we were still touching the BBC, so it's still holding. Support sends us up to resistance at the zone. Resistance at the zone sends us to support at the BBC. Back to the zone. And then on this move where we get below the zone, we trade all the way down the weekly trading zone, pretty much to the tick. 19,595/96. These are the zones published Monday morning at 6:15 a.m. Eastern. So support sends us looking for resistance. We got through the zone, we ran into the BBC. The pullback holds more often than not, so we've spiked it. But the move seems to be losing steam. We got red and falling overhead, which is resistance. So a window of opportunity on this market would be down here. Now, if price can overcome red and falling, you simply trade the window in that direction. So either way, unless the market just goes sideways into the close, you'll either end up with a long trade or potentially a short trade. Crude, we're now in the October contract. Here's where we opened last night. Pull back to the BBC. Pull back holds more often than not. That sent us up just shy of the long target on that candle. Missed it by 4 ticks. And then on this candle, let's see. This one was 4 ticks. This one was 1 tick. And this one pushed us through the target, through the high of yesterday. Then we hit the zone where we consolidated. That's what happens 70% of the time when price hits a weekly trading zone. From there, we rallied up in one 30-minute candle all the way to the zone overhead at 74.45/50, where again we consolidated for a number of hours. And now the market is trying to make its way to the zone overhead. But again, these are not normal market conditions because look, the step line crossed here. Okay. So we would anticipate way back here a retracement to the BBC. But now the step line has almost got itself back on the left side of blue and climbing. So there's certainly a window of opportunity overhead up to the zone. Gold. Here's where the market opened. Got blue and climbing. Price is trapped. We got resistance overhead, support below. Support wins out. We get above the BBC, so we get a little leg, retracement. Then we hit the zone. Consolidate for a few hours. Drop just a tiny bit to the BBC, which is support, and it's what we expect. So that gives us our first leg up. Okay. And that leg, as you can see, is that high right there. So we battle that high a number of times, then we get a pullback to the BBC, and we spike it down to the zone at 25.29/25.30. And that takes us up to and through the long target. And the high of the day is this high right here from Wednesday. On silver, here's where we opened last night. Support below, resistance above. Up we go. We consolidate at the weekly zone. Blue and climbing gets us above BBC. And we make a run right up to the zone. Little consolidation. And then poof. Right up to the zone where we ran into resistance at the previous bearish cross. Resistance sends the market looking for support, which it found at the zone. Support sends the market looking for resistance, which it found just above the bullish cross. Back to the BBC. Now this candle here made it appear that we were heading lower, but we ran into this support right here from earlier in the session. Remember, it takes financial commitment for price to rise. And so traders were willing to make a financial commitment here. And when price revisited that area, pushed us up, and then came Jerome. And Jerome sent us up above this zone at 72.73. Ran out of steam. If you look left, you'll see why. So we get a retracement all the way back down to blue and climbing, which bounces us to a higher high. Again, blue and climbing serves as good support, and that puts us where we're at right now, just off the high of the session. On the euro, it's where we opened last night. Same scenario. Resistance overhead, support below. We get above the BBC, a leg, a retracement, a leg. But on this bounce, we run into red and falling, which is bearish. That takes us below the BBC, right down to this low right here from yesterday. Support comes in, start to move higher in anticipation of Jerome. And then Jerome says it's time to cut the rates. The rest is history. Actually surprised, well, no, I'm not, because of the euro. Jerome saying he's going to cut rates. Okay. That's weakness for the dollar. So obviously strength for the euro. And here's where we sit. We've now managed to get back above. At the beginning of the broadcast, we were below that 38% fib extension. Now we're back above it. And resistance remains at the 50% fib extension, the high of today, and the high of yesterday. Yesterday we hit 65.25. So far today, we've only hit 62.25. So apparently, Jerome confirming that he really probably will cut rates in September. Was factored into the market. I mean, we saw a bounce, but then it sold off real quick. How quick? Well, this green candle, based on what Jerome had to say, turned into this red candle all the way down to the zone. And then by the time the 30-minute candle closed, after finding support at the zone, bounced us all the way back up to here. So how we close today, with the step line crossing, blue and climbing, I think we'll see some of this bullish energy fade into the close. Keep in mind, you've got potential support here, 24% fib extension, 24% fib retracement, and then the daily BBC. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI or send us an email, support@cfrn.net. When you become a passport holder, you'll have 2 hours of live interactive group training every trading day in our live training room. You'll also have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. A never-ending cycle. Also, as a passport holder, You'll receive the Logic 247 alerts around the clock, the Concierge Trade Alert Report when it's published each evening. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the Members Only Workshop every Thursday night at 8 p.m. Eastern. All that and much more. Everything a trader needs. All under one roof. One low price. Journey starts here. mytradingiq.com. Okay, well, let's wrap up this week with our good word for the day. Yesterday, we reminded ourselves that Christ is coming back. He made a promise, and he's not a man that he would lie. So, today's topic. Don't wait. Enjoy your life now. Nothing is better that a man should rejoice in his own works, for that is his heritage. Ecclesiastes 3:22. Solomon writes, "Nothing is better than that a man should rejoice in his own works." That is why we are here. No one can bring us back from death to enjoy life after we die. Begin now to think about what you can do to find more joy in every experience. Present moment, right now, that's all you're guaranteed. So don't wait until later, till you get married or retire or go on holiday or your kids finish college to enjoy your life. No one knows what will happen next in their lives or in the world. You're alive now, so maximize it. Embrace it. Celebrate it. Nobody was busier than Jesus, yet he knew how to celebrate. His first miracle was performed at a wedding feast. His schedule was hectic, yet he interrupted it to enjoy time with children. The needs he faced were endless, yet he took time off to rest. If you had your life to live over, would you take more chances and more trips? Would you climb more mountains, swim more rivers, and watch more sunsets? Would you eat more ice cream and fewer beans? Would you stop worrying about imaginary troubles? Are you one of those people who never goes anywhere without a thermometer, a hot water bottle, a gargle, a raincoat, and a parachute? You get the picture. Don't wait. Starting right now. Enjoy your life. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.